if I told you that the piece of paper you think is protecting your life, your health, and your most valuable assets is actually a ticking time bomb of complexity and fine print, designed to work against you when you need it the most? We buy it to feel secure. We pay our premiums, we file it away, and we hope we never have to look at it again. But we've all heard the horror stories. The claims that get denied on a technicality, the coverage that wasn't quite what you thought it was. The good news is a revolution is underway in the world of insurance, a fundamental shift that is taking power out of the fine print and putting it back in your hands. By the end of this video, you'll understand the three powerful forces that are making insurance smarter, faster, and maybe even invisible. And stick around to the end, where I'll share a truly groundbreaking concept for how you could one day self-insure your most valuable possessions without ever paying a traditional premium. You won't want to miss it. Let's be honest, nobody wants to buy insurance. We do it to get a job done. We want to feel secure. We want to know that if something bad happens, we'll be okay financially. But the current system is a mess. The problem is that the system forces you to become an expert in their world, a world of legal jargon and complex clauses, instead of just letting you trust that you're protected. But what if you could flip the model? The future of insurance is all about one big idea: elevating the abstraction. Now, that's a fancy way of saying we're moving from this to this. All the complexity, the risk models, the data analysis, the legal framework is handled by technology in the background. It leaves you with a simple, clear outcome: security and peace of mind. Let's break down the three pillars that make this possible. The first pillar is the most important. It's about moving from reacting to disasters to preventing them in the first place. Think about your health insurance. Instead of just being there to pay your bills when you get sick, what if it actually worked with you to keep you healthy?
Great job! You've earned a $10 credit towards your premium this month.
Or think about your home insurance. The old way waits for your basement to flood and then sends an adjuster to assess the damage. The new way is an insurance service that detects the leak, shuts off the water automatically, and helps you find a plumber before any real damage occurs. It's a partner, not just a passive policy. The second pillar is all about speed and transparency. It's called Parametric insurance, and it completely gets rid of the traditional claim process. Instead of you having to prove your loss and argue about how much it's worth, Parametric insurance pays a pre-agreed amount based on a verifiable public data point, a parameter. Think about it. A policy that says, if an earthquake of magnitude 6.0 or higher is recorded in your zip code, we will deposit $100,000 into your account within 24 hours. No adjusters, no paperwork, no questions asked. It's faster, simpler, and gets money into your hands when you need it the most. The final pillar makes insurance so seamless, you might not even know it's there. It's called embedded insurance because it's built right into the things you already do, but it goes way beyond that. Imagine your insurance adapting to your life in real time. You don't have to call an agent or buy a separate policy. You just live your life and your protection adapts with you. That's the power of truly embedded insurance. So what does this all lead to? Proactive prevention, instant payouts, and invisible coverage. It leads to a complete reimagining of risk. And that brings me to the self-insuring concept I mentioned at the beginning. Imagine you're buying a new car. Instead of having to go find an insurance policy and pay a monthly premium for 2 years, what if the model was completely different? With this model, a portion of the car's purchase price is automatically placed into a protected, ring-fenced fund tied directly to the car. It's your money and it earns interest. If you have a fender bender, the repair costs are drawn directly from the fund, instantly. And here's the best part. If you drive safely and don't have any claims, when you sell the car, you get the entire fund plus all the interest it earned back. It completely transforms insurance from a sunk cost into a form of savings. It's a total paradigm shift in ownership and risk. The future of insurance isn't about better policies, it's about better outcomes. It's about shifting from a complex product you're forced to buy to an intelligent service that proactively protects you. I've just scratched the surface here. For a much deeper dive into these concepts, the business models behind them, and how you can apply this thinking to your own industry, I've written a detailed article on my Substack. The link is right at the bottom of the description below or in the first comment. And now, I want to hear from you. What is the one thing you wish your insurance did differently? What's the biggest frustration? Let me know in the comments below. I read every single one. Thanks for watching.